Hello, fellas. Welcome to Market Daily Review. Let's get it done. I'm a bit tired today, but it is okay. One second. Alright, so after yesterday's close, I was watching the overnight price action while I was recording the yesterday's review, and I was thinking about price retracing down into range EQ or discount. I'd rather range EQ though, because it formed an S&P divergence at the highs here, and we have a lower time frame S&T in the solar block. So we have this dealing range, and the lower portion of the big fair value gap is in discount, right? Now here is what happened overnight though. So that S&T divergence sent the price to the discount array, but it's rather range EQ, but it broke down. So it just didn't stop, and it just broke down, displaced lower. So that's the first sign the market is not in pullback but rather in reversal. Okay, so it went for the sell side here, tagged the sell side before New York open, and afterwards it was just an accumulation until this candle closed, which is 7:30. Okay, it's because there is a fair value gap here. Okay, CB, and the accumulation below here, this whole accumulation it became a trap shorts. Now because of that, the low, I'm gonna delete this, delete that too. The low of the trap shouldn't get tagged, because the idea behind the trap is, algorithmically speaking, because market trapped shorts here, it shouldn't give an opportunity to short sellers in this accumulation to mitigate their losses at a fair price. What is a fair price? Either in profit or at break even, meaning price shouldn't come here, because if it does, then the short sellers in this price action, they're going to be covering their losses in a profit, basically, not losses anymore. So that being said, before New York Open, I think everyone should have had bullish bias because of this price action, because the signal was given at 7:30. Now let's keep going on. Also, I'm going to annotate the short-term buy side from the range EQ should deliver the short-term buy side minimum, and then we also have this high. This is the external high. I think that's the draw on liquidity for today, but we'll see. So here, after New York Open, this also the trap fair value gap is in discount. Okay, I'm gonna annotate this as trap fair value gap slash discount fair value gap. As you can see, even though today was definitely choppy, and it was definitely not an easy market, um, it never violated the fair value gap. That is algorithmic delivery. Um, it's very good to see this kind of price action, regardless of how choppy it was. So in these kind of conditions, what you need to be focused on is, if you decide to trade, I say don't trade, but if you decide to trade for whatever reason, you need to be executing at extreme levels, meaning you need to be either executing as market diverges, or maybe engineer liquidity raids and stuff like that. Okay, otherwise if you catch the price in the middle, what's going to happen is you're going to be chopped up. You're going to be either taking too many positions, probably all of them at a loss, or you'll be taking again too many positions, and all of them will be break-even trades. Okay, so you need to be focusing on the extreme levels. So here, let me pull up ES. Now this was not on the lower time frame, but on the, I think it was 5 minute, but let me check 15 first real quick. I'm not sure which one it was. Here, let's take a look at the lows. Okay, on the 15 minutes. It diverges here. Okay. So Nasdaq is stronger, making higher lows, whereas ES making lower lows. So this is actually not even on the 15. I think this is hourly S&T. I would say no, it's not hourly. Is it hourly? No, it's not hourly. 50 minutes. So price is holding bullish, not moving, but it's holding bullish structure. Okay. So here, let's go down to 1 minute from here on and read the market on a 1 minute basis. I'm going to delete the chart pair value gap. I'm going to delete this. I'm going to keep the chart low. This is chart low. And then I'm going to delete this at higher time frame S&T divergence as well. And let's go to 9:30. 9:30 is right about here. Okay, so here at 9:30, there is no divergence whatsoever. It's just like literally just random buy stops, run the equal highs, and then immediately reversed. Now here's a couple things that I need to mention. I think Nazmi was talking about it. There is the order block formation, immediate rebalance, and this immediate rebalance shouldn't fail for a low resistance run into sell side. Okay, now let me take a look at the 1 minute chart on ES also. I want to see if these lows were S&T or something, because that means there is a market maker sell model as well. So these lows are not S&T. Let me see if there are any other divergences. Nope, not that I can see. Oh, there's one here. Literally. Right there. So that's the target of the sell model, okay? It's targeting the S&T divergence low, which is the sell side. Came down there, tagged that low, and immediately reversed afterwards. And the reason it's targeting this low is because this is the actual sell side liquidity, okay? Because that's the S&T divergence, meaning this is the original consolidation, basically. Then it rejected off of that level, started accumulating. Not accumulation, I need to pull up ES because there are a lot of highs and stuff there. As you can see, it's forming 1 minute divergence along with the higher time frame divergence. So here's a bearish one. This is another bearish divergence. This is probably on the 5 minute though. So it uses the deep premium this time to go towards the sell side one more time. Where's the sell side? It's below the wick. So here, forming order block. That's the order block, and then immediately reversed down into sell side one more time. And after that, it reacted from there and went for the buy side this time. So it is seek and destroy, essentially. Goes for sell side, buy side, sell side, buy side. You know, if you see this happening, don't trade. Just go to gym, go to walking, or I don't know, like take your dog out or whatever. Come back in the afternoon session, basically. Okay, because it's going literally. You can see it. So here, running the highs, running the lows, right? Then running the lows one more time, and this time goes for the highs. And after the highs, it goes for the lows. Okay? So be careful in this market. When it does this, just let it go and come back later. So here, what happened was ran the buy stops. Okay, it's running the buy stops, staying above the buy stops a little bit. This is a, I would say, 30-second time frame trap. I'll go on the 30-second, you guys know. Forming a trap. This is a 30-second though. No, I can't go down. Okay, I'll go down. So some of you guys will think I'm bullshitting or something. So price accumulating above a BC, I'm sorry. Trap shorts, trap longs. This is a trap fair value gap once it inverted. So 10:05 candle closes outside. Now you have a trap fair value gap, meaning it should deliver its sell sign. Okay, so this is golden zone. Let's call it golden zone trap FEG, right? And go back to the 1 minute and put the CE of this fair value gap. Now, where's the sell side? The sell side is the low here, and it goes for that delivery. Oh my god, fucking up too much. It goes for that sell side. Now you have a higher time frame, 3 drives. One low, second low, the third low. Actually, there is, I wouldn't call it 3 drives actually, because it runs the buy stops before the third low. So here, delete all that information. Now what happens is, in this entire downside delivery, okay, towards the sell side, market actually never formed a bearish S&P divergence. So there's literally no buy side target, and because of that, the whole rally afterwards is very suspicious. Okay, so here's what happened. Price accumulated a little bit. Okay, so the structural shift. Now the sentiment has changed. Then there's this fair value gap, which was inverted, so it also formed a trap. But along the way, like I said, there's no bullish S&T divergence on the south side of the curve. So no high probability target. And what it does here is, so it forms a high, runs the high, forms another high, runs that. Now it formed a 3 drive into deep discount. This is a dangerous market, I'm telling you guys. This is very dangerous. 3 drives, and in that 3 drives, it actually forms another trap. Here, accumulation, flip the fair value gap. Now 10:47 candle closes outside. Now you have a confirmed trap longs at the highs, along with, let me see if this is, along with a 5 minute probably S&T divergence. This is not a 1 minute, okay? This is a 5 minute S&T divergence. You see that? I'm going to 5 to show that it's on the 5. There you go. So it forms a 5 minute S&T divergence, forms a trap. What is it going to do? It's going to use a trap fair value gap to go for the 5 minute low, because the S&T divergence is on the 5 minute, okay? And because of that, it needs to deliver the 5 minute sell side, okay? Now let's take a look at 5 minute real quick and see where the sell side resides. So this is the first low. Then there's this one right here, okay? Let me go on the 1 now. So it goes up for the trap fair value gap, delivers the low hanging fruit objective, which is the 5 minute short-term sell side. Then it tries to go for the external on the 5, never tags that, and I'll get there in a second. Now here, it pulled back into the trap fair value gap one more time, and in that pullback, so here, first of all, in the first leg, it formed an S&T on the 1 minute, okay? Then delivered by the sell side, consolidated a little bit, okay? Never formed a new 1 minute S&T, but it rather formed a 5 minute divergence again within the fair value gap, okay? So here. So because of that, you can actually expect one more push down. And this delivery was also caused by, so here's it's in discount here. 1 minute divergence is present. That 1 minute divergence sent the price towards where? The 1 minute target, buy side, right here, okay? Because this is the S&T divergence. If it could go further or displace further, it's going to go for the 5 minute one, okay? So, but ES never caught up, so it broke down one more time. This is the last premium fair value gap. Tag the sell side on the 1 minute. So the 1 minute market maker sell model was completed. This is the scalp itself. Okay, even like, I personally don't trade it, but even this is a trade. Okay, if you can't catch this, I'm not saying it's easy to catch, but it's definitely doable. So it uses the last premium fair value gap to go complete the 1 minute sell model. Now I'm looking at this low. Let's see what happened there. So it tried to come down there, pull back into range equilibrium, pull back into range equilibrium one more time. Let's see if there's S&T divergence present there. Here I'm looking at these highs. Now it formed the divergence. That's a turtle soup. Now you're looking at the short-term sell side and the 5-minute sell side right there. It delivers the short-term sell side, but never tags the 5-minute low. And here's why. So if you look at ES, ES tags that low. Now what that means is, this is a 5-minute low on ES. What that means is now you have a higher time frame divergence. Okay. Now in any event, in any case, if this forms lower time frame or bullish order flow at these levels, now you have a confirmed buy model. Okay, on this time frame, on a higher time frame as well. So let's take a look at the lows. So Nasdaq left equals. Okay. As for traps, I do not see traps. Probably on 32nd, not on the one, but on 32nd perhaps. Yes, also left equals ugly, 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 ugly. It could have come down here like later in the day, you know, easily. So once it takes the order block, bearish order block, now the sentiment in the market has changed. The order flow becomes bullish up there. There is a displacement into deep, into premium. So this is the last discount fair value gap. Now you can wait and expect an S&T divergence in between these lows because there is no divergence present here. Did it form there? It did not form it. It rallied afterwards, you know, targeting where? Targeting this. So never reached there though. Okay, it never reached there. Now what we have here is you have a new dealing range though. So the dealing range would be 5-minute high here, all the way down to the trap. Okay, and you have this dealing range along with the higher time frame one. Let me delete this one. So what happened here is it couldn't deliver the buy side. It diverged. That's why it didn't deliver. Let me see if it's a divergence there. It is not a divergence. It is not a divergence. That's why this whole rally down into range EQ is suspicious because it never formed, what do you call it? Smart money reversal. Maybe it formed a trap, but again, that trap, yeah, I don't know. I wouldn't call this a trap that much, honestly, but let's say, for the sake of this conversation, it's a trap. Now you have a smart money reversal, goes for the sell side or range EQ, but as you can see, it stalls at the range EQ with bodies and reacts afterwards very sharply. Now that means the whole rally towards the sell side here becomes what? It becomes a pullback instead of a reversal, and now you have a trap. This is the trap. This is the short-term buy side. Okay, that should be the low-hanging fruit objective. Okay, so it rallied, came down to deep discount again, tapped the chop fair value gap and send the price afterwards. Tagged both the highs here and completed the buy model intraday. Ugly price action. Okay, I'm not saying it was easy or whatsoever. It's an ugly price action, which is why you have to be focused on trading at the extremes. If you're bullish, you need to be turtle souping, or maybe like as it diverges, you long the divergence with a tight stop loss, you know. So here, looking at the lows again for a possible divergence, I'm not seeing any. There's a divergence at the highs though. Comes down here. So this whole move, unless it takes out the trap low here, this is a trap low, you have to stay bearish. I'm sorry, bullish. No matter what it does, you have to stay bullish, okay? Because that's the invalidation. As long as it stays above the trap, it needs to deliver the buy side basically, unless it forms an S&T divergence, okay? So here I'm still looking at the lows to see any divergence. Not seeing it actually. There might be like on the microsecond charts. It might be on the microsecond. Not sure. Not a good price action though. So if you made profit today, pat on your shoulder. So it went for the buy side, and that buy side is what? The overnight S&P divergence. That's the drawn liquidity. Okay, not these highs, not this one. This is a partial. That's not the drawn liquidity. Okay, that's the partial. This is the drawn liquidity. Okay, there's a difference in my opinion. Now let me go back on. Let me delete everything. Let me delete all that. Actually, maybe it's on the other layout. Let's see if it's on the other layout or not. It is not here. Nope, it's not here. Okay, I gotta paint it again. Here there was discount. 50-minute fair value gap. This is discount. FVG. This is the dealing range for the market maker buy model. Now we're looking at the highs. The high at 787. 787 should deliver here. This is the second stage in the form of catfish. Sell side of the curve, buy side of the curve, second stage. This was the first stage, pullback, second stage reaccumulation. I think it's not going to stop up in that high. It's just going to keep going probably. But what I wanted to look at is, I'm going to actually pull up ES real quick. Delete all that jazz. Oh, there's a divergence right now? No. Okay. So I'm looking at the highs, trying to spot any divergence, any potential high probability draw on liquidity on this time frame. I don't see much here. Maybe on the 15. Yeah, probably on the 15th. Very clean high for ES. Same deal for NASDAQ. So still looking at the highs. Okay, that's also S&P divergence here. So this is S&P. High probability draw on liquidity for ES. I think there is an S&P here too. ES just tagged the buy side. Got the alerts. Is this an S&P? So hard to see. Yes. So this is an S&P too. I'll just tag this high instead though. So I think the actual drawn liquidity should be that buy side, 879. It's gonna be step by step though. So first 8778, and then the S&P high. So I'm gonna annotate this. This is original consolidation. S&P high, prob, buy side. Okay, looks good. And this is the hourly low hanging fruit objective. That's why I'm keeping it on the chart. It looks good. Alright guys, gonna take a rest here to get ready for tomorrow. I'm very hyped, very excited. I think tomorrow should be very good in terms of like price action. I'm excited, so let's get it. Have a great night. See ya.